Hey traders, Jonathan here from ForexSchoolOnline.com. Today I want to discuss a setup that I've just taken my last quarter profit on that I entered roughly just over 2 weeks ago. It was on the 4-hour time frame of the US dollar Japanese yen. The setup I am talking about is this large pin bar reversal up the top of the chart here. It's a very obvious and clean setup. The theory behind the obvious setups and the large setups is, if they are very big and large, the chances are, if you've noticed them and you've seen the large ones, the chances are the next guy is going to notice them and see them and also trade in the same direction as what you're trading. So if you could always stick to the more obvious signals and the better signals, the chances are you're going to put a bigger edge in your favor. So what made this pin bar a good trade for me to take? Well, if we go to the daily chart, you can notice that I've already marked in this level. Okay, it's a very big round number of 80.000. Okay, and if we look to the left, it's held as previous support, a bit more support, a bit more support, and prices have eventually broken through and fallen away. Then prices come back up to retest, and if we go back to the 4-hour chart, prices actually retested and been rejected, and that's when this 4-hour pin bar is formed. Now, the pin bar is telling us that price has rejected and that previous support has held and has now turned into new resistance. Now, that's important. Okay, so that previous support has turned into new resistance. So how was I now going to play that? How was I going to play the pin? Well, for me, I always play my pins the same way. I always play the pin at a break of below the low, or if I'm going long, a break of the high. In this case, I was selling short. So I set an order to sell short at the break of the low, and I set my stop above the very big round number. Okay, not above the high of the pin, because I figured in this instance, if price was to go back above this new resistance, the chances of it going higher were very good. So my stop, I was comfortable with having a stop there, and I was comfortable with having my entry. That was a fairly safe stop. If my stop was going to be taking out there, chances were price was going to continue higher anyway. Next was, how was I going to manage my trade to best maximize my chances of staying in this trade, but still maximizing my risk-reward potential. Okay, so if we zoom out the chart a little bit, we can see that we really do have a lot of space to move into. Okay, we've got a little bit of support down here, but we do have a lot of space to move into. I simply set my first support area down at the 78.05, and that's when I took 50% off the table. I took 50% profit off the table. I set my next quarter off the table at 77.25, and I've now just taken my last quarter off at 76.80. This has been a nice trade, but the reason it's been a nice trade is for a few reasons. A, because I was trading with the trend. If we go back to the daily chart, you can see the overall momentum was down. Okay, it was from left to right with the chart. The momentum is down. We're having some pullbacks, but the overall momentum is down. If you can always trade with the momentum, you're going to put the chances on your side. I traded from a swing high. If we go back to that 4-hour chart, I traded from a clear swing high. The third factor was I traded a clean, obvious, and large price action formation. And the last factor was I protected my capital and I planned my trade and I traded my plan effectively. I hope you enjoyed today's Forex trading video. If you'd like to learn anything more about Forex or price action, jump over to Forex School Online, where we have plenty of Forex videos, Forex articles. We run a Forex blog. There's also an advanced Forex trading course that includes a members-only forum. As always, trade safely, and I'll see you in the next video.